Last video update for Polygon, I made a joke about how we went up an escalator and then we fell right down an elevator shaft. But in all honesty, Polygon doesn't look like it's crashed quite as hard as some of the other cryptos. Maybe Polygon had a parachute on and it fell out of the escalator. So things are looking somewhat decent. We may be close to a pullback completion. We may be done already. But to shed some light on the situation, I've got the 30-minute linear chart for Polygon or MATIC network displayed in front of you right now. And we have our primary blue pattern. If you recall from our last update, the formerly primary purple pattern is now invalidated. We'll touch on that again in a bit. But we have our low that we hit on January 24th. And that is right around 131. And since then we've bounced, but it's not the best looking bounce. In some of my other altcoin updates, we actually do have what looks like 5 waves up in diagonal fashion. We see no such thing in Polygon. So our bounce is a bit ambiguous, to put it lightly. The bullish thesis here is that we have a wave 1 in place, and we are in the middle of some kind of complex correction. Maybe this is a wave 2, and we're about to launch into a 3rd wave. That would be a very encouraging sign that we are actually done with this correction and we're about to turn back around. But more likely, I do think this red lettering gives us a more clear, more probable pattern that we're seeing here. It could be a 3 waves up, A, B, and C. There's nothing clearly impulsive. This doesn't look like it fits the standard Fibonacci levels of an impulse, of a standard impulse. The pullback is sideways and ugly, very characteristic of B waves, which are some of the ugliest structures in all of Elliott wave theory. And well, we are likely in midst of a C wave that could bounce us all the way up to nearly $2, which could actually be quite a bull trap, if you ask me. What is the alternate? Well, I have this blue box drawn that says that maybe we're not done with our pullback yet, but we don't have too much further down to go. If we look at this structure, a little bit bigger picture, if we look at this as an ABC, that is, well, we've already had enough of a dip to complete this wave 2 pullback in blue, but we could fall a bit lower. Some of the internal Fibonacci's are pointing much lower. If this is actually a 1st wave down, this might be the 3rd wave down, and we may have a 5th wave to finish this whole thing. Lots of different possibilities. It'll make a bit more sense on, of course, our big picture, and this chart will be available to you in the description below, so please be sure to check that out. I'll have a link posted for this TradingView chart. This is, again, the daily logarithmic chart, big picture. And Polygon, a lot like Solana, which I just covered, had a meteoric rise in the face of, well, less impressive rallies than some of the other cryptos. This thing went crazy. Then we had our crash middle of summer, which coincided with pretty much every other crypto, including Bitcoin and Ethereum. And we've had a much more vigorous rally here since that than most other cryptos. Only cryptos such as Dash, Polkadot, and maybe Solana, maybe a few others could match the vigor with which we rallied here. So our primary pattern is blue, and that has this, it's really a continuation of what I have in purple here. You could just pretend this is blue, same thing, but we had our major peak, a major wave 1 in May of 2021. We had a wave 2 pullback, which is just deep enough to satisfy our requirements. It was a little deeper than 23.6% retrace for the wave 2, so it's not preferable, but at least it fits within the bounds of what a wave 2 retrace should look like. And we've had a bounce, which I am calling the subwave 1 in blue, of a larger rally that we have underway. This latest pullback would be at least all or most of the wave 2, which would be what you'd expect, basically a bull market, healthy correction. If we are following blue, if that is the case, we will either start bouncing now, or maybe we have a little bit lower to go before we bounce back up into this purple box, which I'll go over in a second. If not, we may be following our red pattern. Our line in the sand that I'm drawing right now is going to be at the 89-cent support level. So that is what you see marked with a thick red line here. And really, this is kind of arbitrary. This is just purely based on Elliott wave theory. If we retrace more than 76.4% of what I'm calling the wave 1, it makes it far less likely that this is going to be a bullish pattern. It's probably not an impulse, especially with the internal shapes. This looks like it could be an ABC pattern, even if it is a bullish rally, whatever it is. Maybe it's a diagonal, whatever it is. It should, even if we expect deep retrace, whether we're falling blue or red wouldn't make much sense, make much difference at that point. So for all our practical purposes, red would immediately become primary. Where could we go if we have red? Well, we could actually go a little below the red line. In Ethereum and Bitcoin, we have our low back here. I have that marked as a red A wave in all of those. And just because we've rallied so strongly in what I'm calling the B wave in red, I wouldn't expect us to drop as sharply as far down as a standard retrace would be. So very good chance that that would serve as a hard floor for us, right at 62 cents. I think I have that written in the description here, 65 cents, whatever that is. Very good chance we just hit that low again and then bounce back. However, if we use some of our bigger Fibonacci extensions, I keep reiterating this, our A wave to our C wave ratio is usually 1-to-1 or greater than that, maybe a 1.382 extension, 1.618. That's the whole range that this blue box covers. And in addition, there's another confluence there. Again, when you have a wave 2 that pulls back, oftentimes your retracement point will align with the smaller fourth wave in the preceding rally. So a lot of possibilities here, but because we've already fallen so much and there's just so much distance down, I can't see Polygon going that far into the box. So watch that level. Again, 89 cents is your key support. If that breaks, it's not time to panic. It just means we're having a more healthy, more standard looking Elliott wave flat correction. Maybe it's a fourth wave, even. Who knows? So I'm going to stick with the second wave interpretation because on a big picture, we haven't really had any big pullback so far. I'm calling the first wave back here, but who knows? Maybe the first wave is here. Very, very iffy, very vague. This is, again, one of those altcoins that has very low, very short history. And I'm going to harp on this again. It is the time to start thinking about buying. As bearish as I have been short term, we have done nothing to invalidate anything. In fact, this is a very good thing that we are having a more standard textbook-like correction. Again, A, B, C would align much better with what we're seeing in Bitcoin and Ethereum, make much more sense, and we can have a much more accurate projection. That said, when you have high risk, high return cryptos, altcoins, don't fall in love with one, fall in love with all of them. Buy 7 or 8 of them. If you love Polygon, give some of the other ones a shake. You know, I bought Solana, I bought a lot of other ones. I've actually, I think if I'm not mistaken, Polygon, Solana were the lone cryptos that kept my portfolio alive during the beginning of this crash. There's other speculative cryptos out there, EOS, Stellar Lumens, I could go on. Shoot, even Shiba Inu might be a meme coin, but these all seem to follow the same sentiment patterns. So don't forget to diversify because you never know if the one you picked breaks its pattern and just goes kaput. Now, where are we going to go if we do bounce, either from here or the red box? I've made a projection based on this low here, just because that was our low in the midsummer. You expect to go somewhere between the 0.382 and 0.618 extension for your first subwave, assuming that this blue subwave 1 is not the actual subwave 1, but rather that's just a B wave. We could find ourselves somewhere between $6.28 all the way up to $26. So keep your eyes on the prize. We've seen crazier things before. Look at this rally. We just went parabolic. It's like a shaft of light just straight up into the heavens. We were hovering around literally 1 cent, 1.2 cents. Where do we find ourselves at? $2.90. So it's pretty wicked. Polygon has done crazy stuff before, and you never know, it could do crazy stuff again. So now's the time to start planning your buys. I'm going to have a lot of videos on how to buy, how to allocate. I'll do some, present some stuff on what I see as the risk reward ratios for various different cryptocurrencies so that you can allocate according to your risk tolerance and your plans. So don't forget to subscribe. And if you enjoyed my video, please give me a like. Until next time, thank you for watching and happy trading.